Welcome to the Wealth Tracker, where we dive into the uncharted territories of niche investment strategies that promise to redefine wealth. Hello, I'm Hongbin Jeong. Now, according to the World Bank, its precious metals price index extended its gains to reach an all-time high back in October before easing in November of 2024. Now, the recent price increase was largely driven by gold, which reached a record high back in October. So can this bullish momentum continue to build for gold, silver, and platinum? What's the outlook like for these precious metals in 2025? Well, to find out more, joining me now is Con Hao, who's the founder of Weipedia. Con, welcome to the show.
Hi, Hongbin. Thanks for having me.
Thank you so much for joining me. Well, okay, just to recap here for our listeners out there, how did precious metals perform back in 2024, and what were some of the key movers of the precious metals market? How would you assess the overall performance of the precious metals market back in 2024, particularly in light of geopolitical developments, central bank monetary policies, and inflationary pressures?
Well, 2024, I think at the start of the year, we saw that gold start picking up in a massive way all the way throughout the year. And towards the second half of the last year, we also see that silver seems to have catching up.
Right.
But it didn't come easy for the gold. In fact, there's a lot of pressure for the gold starting from 2020 all the way to 2023, at the end of 2023.
Okay.
So it's a good 3 years. Now, I could see that the gold has been trying to break 2,000 US dollars throughout that 3 years. Yeah, 2020 to 2023. And for every year, it tried to break above, but it kind of failed. And then 2022, it tried again. And 2023, I believe that it tried twice.
Right.
And at the last trading day of 2023, and I saw that the gold successfully closed above 2,000 US dollars.
Yeah.
And beginning of 2024, I did a vlog just based on this price behavior. And I believe that 2024 is a gold market, that gold should resume its uptrend, having been locked up for the 3 years in a range-bound market. And here we saw that gold in 2024 was a very good performance. It reached almost a high of coming close to about 2,800 US dollars. And of course, the last quarter, you saw that gold kind of did a little retracement, but I believe that that's really healthy.
Okay.
And how the geopolitical development, central bank monetary policy, and inflation pressure are going to impact the gold? Before we touch on this topic, I believe all these will cause midterm jitters or volatility. But allow me to just bring back to some history about gold.
Okay.
Go back to 50 years ago, because that main frame is important. Once we understand the main frame, all this midterm, perhaps even short term, I hope that the investor will be able to manage gold better. Now, in fact, the gold has 4 significant years that caused it to rise in progression. The first one is 1971, and followed by 2001, and followed by 2008. And the last rise was in 2020. Now, what happened to 1971 is that, I think we all read about it, is the removal of gold standard. So before 1971, gold was at 35 US dollars. Now, on the announcement of the removal of gold standard by President Nixon, we saw that subsequent years that gold from 35 US dollars went up to 800 US dollars.
Okay.
And then from then, in 1980, and that was a high, it kind of lost its interest, and the market for 20 years, 1980 all the way to year 2000, it lost interest. But we saw that gold kind of supported at 250 US dollars for 20 years. Not many investors are interested in gold back then. But here comes 2001. And 2001 was a significant year for gold. What happened was that the Japan or BOJ has introduced QE for the first time. That's in our modern financial history. It was being introduced by the Japanese, not the US, QE. And from that 250 US dollars, we saw that gold rise to 1,000 US dollars. So that was a significant years. And then it did a retracement. And here comes 2008. So what happened to 2008 was a US financial crisis. And then US, for the first time, you saw that what the Japanese have did, it seems like it's pretty good. And they have experimented on QE. And the US have also rolled the QE 1, 2, and 3. So you know the history. But with the QE in 2008, we saw that gold break above 1,000 the previous resistance and go all the way up to 1,900 US dollars.
I see.
And then the last significant year is the year 2020.
Okay.
So what happened the year 2020 is that COVID-19 and the US have wrought another massive QE program called the US COVID QE package.
Okay.
And that was massive. And we saw from gold, it kind of stagnated for 3 years. Earlier I mentioned it rise above 1,009 and recent high was nearing 2008.
Right.
So in the context, yes, geopolitical development, central bank monetary policy, inflation pressure, it will cause volatility. But I think the main understanding here that what caused the rise in gold since the 70s until today, what can you read from the story I just told you? There's two things. QE, if between the two evers, I would say that QE is a bigger ever. And the second little ever is, in fact, the debt in the context of trade deficit. So debt with trade deficit, it is harmful. There's a lot of lagging effect, but I think we start to see that. And gold have priced in the inflation, and inflation pressure only start to build in the year 2022. That's why we saw this US CPI hit a high of 9%.
Okay.
Yeah.
I see. So given the historical context here, heading into 2025, can gold continue to soar this year? How high may prices go? Can it break the $3,000 mark?
Yeah, I think using the word soar is a big order for me, but I would say that based on the context of understanding as an investor, myself, I got to always constantly ask myself, is the central bank around the world going to abandon the next QE when there's a next financial crisis or whatever crisis may be? My answer is unlikely.
Okay.
And I think QE is here to stay. And that is basically central bank printing money and purchasing the bonds, which is a bigger lever. And then the debts with trade deficit is not going to go away. Once we have an understanding of QE and debt, it's not going to go away anytime soon. Highly likely the trend of the gold and the precious metal is going to continue to move up. So I would say that I cannot do any prediction whether it's going to break 3,000 or not. As an investor, I will avoid making prediction for myself. But rather I have to understand the fundamental of what caused the gold to rise, this trendy market. And if gold ever go to 3,000, which is not that far away, at that point of time I have to do a checklist of these two questions. Is the QE still there? Is the central bank around the world tempted to roll another round of QE? And the debt with trade deficit still there. If these two elements is still there, I think the gold is still on the uptrend. So any retracement, like right now we're seeing, is a very light retracement. I will take every opportunity to buy when opportunity arises.
I see. Well, other than that, to what extent do you expect the US dollar and Donald Trump's administration to impact gold prices for the year ahead?
I think when President-elect Donald Trump won the election in November, I think it was a good news because a market watcher, business leaders know him very well, considered second term. And he's pro-business. And that gave good light to the US dollars that we saw that since the election until today, the gold or the US dollars have go up, right? But we have to understand that from what I've observed over the years, in fact, the US dollars and gold have this inverse relationship. If we're going to compare it day to day, week to week, month to month, or even quarter to quarter, we may miss it because I would still consider mid to short term. But if we're going to compare a longer term period, so we will literally see that US dollars have weakened over the last 2 decades. Maybe if you're going to compare to dollar yen or euros or British pound against the US dollars, we may miss it. But I would like to compare the US dollars and the other currencies that being well managed by certain countries. For example, Sing dollars. And let me just go back to 2001. And Sing dollars was at about 1.8 in 2001. That was more than 20 years ago. And today it's about 1.36, about there. And in that relationship over the last 20 years or more, in fact, the dollar Sing have weakened, means that US dollars have weakened against Sing and Sing dollars strengthened. That is in the percentage of 26%. But what is the other pair of currency that's very well managed? Is the Swiss. If you talk about dollar Swiss In 2001, it was at 1.83, and today it was well below $1. It also means that over the last 20 plus years, the US dollars have depreciated against the Swiss by 50%. But during that period, you see that the US dollars have declined, but the gold from 2001 to today, it have risen by almost 1,000%.
Oh, wow.
So, so to track what to look out for gold, I will look at currency.
Okay.
Any weakness in the currency, that may also means that, because we have to understand that most of the commodities around are priced in US dollars. So it means that when US dollars are weakened, that commodities prices tends to move up. So by looking at different pair of currency, it may be quite confusing. We can look at dollar index. It's a basket of dollar. It have declined over the last 20 years as well. But being in Singapore, maybe Singapore dollar Sing will be a good benchmark. The recent low was at 1.27 or 1.28, about there. That was last year. I will keep track of the dollar Sing very closely. Anytime that you have broken last year low at 1.28 and you have this downward trajectory pressure, it means that dollar has weakened. And then I will be expecting inflation pressure to build up again. And definitely, I believe that gold will start to price in with that dollar weakness.
I see. Well, other than gold here, silver also stood out as a key performer last year. Now, this precious metal, often overshadowed by its more glamorous counterpart, gold, has shown remarkable resilience and potential for growth. So what is your view on silver's performance relative to gold in the year ahead? Could industrial demand for silver provide an edge over gold?
Definitely. And I do believe on the two elements that I just mentioned at the beginning of this talk show here is that the QE and the debt with trade deficit is harmful. We may not see in the short term, but given time, there's always a lag effect.
Right.
In 2022, we're seeing that the inflation hit a high of 9%. And of course, gold has moved up, and I always look for alternative. And the alternative could be silver.
Right.
And I did a case study, interestingly, here is that I try to mirror it between gold and silver, where it seems to me back then, before I do this case study, it seems like silver is lagging gold, but not exactly true, but they move in tandem together. And the case study I did for myself was that 3 rounds of appreciation of gold since the 70s. The first round was an 80s inflation. And I do a comparison between gold and silver. And from the trough in the 70s to the 80s inflation high, the gold has appreciated by 8.7 times. And comparing to the silver, it catch up later. And I saw that this silver catch-up, the way it catch-up was fast and furious. Of course, I was still a kid back then in the 70s, but that's why case study we can track back the history. So from the trough during the 80s inflation, I saw that from a trough to the peak in the 80s, silver have appreciated by 32 times. So you could see that's the multiplier effect of investors start to find that gold is pricey at a point in time. They try to find alternative assets and they catch up on this purchase. So then the next move in the gold was the 08 crisis. So 08 crisis, from the trough in the 90s to the 08 high, the gold has appreciated by 7.5 times. And then shortly later, or either one, I can't remember, the silver also picked up a lot. In fact, much more than gold, by 12.4 times. Yeah, so you could see that from this comparison or this case study, gold move up, maybe it's inflation fear. But silver, based on this case study, it seems to catch up. So when it catch up on the past two case study I did, it seems that you have the multiplier effect. It seems that it's more than gold. So right now, I'm very interested in silver.
Okay.
I've been accumulating some silver as and when, and each month and each time I have some surplus, I'll look for alternative asset hedge inflation like silver. And just to take note that why gold and silver is always in my bag to hedge against inflation, because in the history, gold and silver, it was the monetary currency.
Right.
Yeah, so it's so precious.
No wonder they're called precious metals. Well, you're not alone here. Some industry experts and analysts, they have made bold predictions about silver's future, with some forecasting prices as high as $100 per ounce. What's your view? I mean, do you think it can hit as high as $100 per ounce for this year?
I think my answer is going to be the same. I would not like to predict or make a forecast the exact price of the silver, how high it will hit this year. So even it hit $100 this year in 2025, at that point in time, I'm going to make a measurement and ask myself that is there a euphoria in how the investor buy into the silver? If there's euphoria, how do you sense euphoria is very simple. If you get into the taxi or you go to the hawker center, everyone is talking about, the taxi driver is talking about, can I invest in silver? The hawker center, the owner, vendors are asking me about, they know that I'm an expert, they're asking me, when can I buy silver? Then you know that the masses are getting the silver, and that could be a sign of euphoria. So even if you go $100 at a point in time, I have to make a measurement on the two elements. Is QE still there?
I see.
Yeah. Is the debt with trade deficit still there? If the answer is yes, I will continue to hold on to my silver position and gold position, provided the market is not euphoric.
Right.
Because once you get euphoric, I may want to cash out some because it's overdriven. So wait for a retracement, and I'll ask myself these two questions. The two elements are right, the QE and debt with trade deficit, if they are still there. If the answer is yes, I will continue to buy on dips for both precious metal.
Okay, so we have about a minute left of this interview here, and very quickly I've got to ask you about platinum prices as well. I mean, they're likely to remain range-bound this year despite strong demand and tightening supply, according to experts. So what's expected for platinum this year round? Can investment demand growth provide some support to prices?
Yeah, I'll make it quick for this. And I could see that platinum prices has been staying stagnant for a long time because of EV. And there's no real need for industrial use. So what happened here is that I could see that volume pick up, but the price is not moving. When this behavior happened, that price is not moving, but volume pick up, it means that investors are accumulating.
Okay.
That in the hope that it is a precious metal, but they hope that it will be like silver. But I would say that the ratio between gold, silver, and other precious metal, gold is always maybe about 50% in my bag, silver 25%, and the rest maybe 5 to 10%. Why? Because the rest of the metal were never monetary currency at all in the
Makes
past.
sense.
Yeah, so I believe that platinum may catch up, but no, I'm not exactly sure. It's a little bit risky to take that risk, but if I don't risk it, I risk it all. So therefore, it's about 5 to 10%.
I see. Well, thank you so much for joining me today.
Thank you, Hongbin.
Thank you. That was Con Hao, founder of Weipedia. This has been the Wealth Tracker with me, Hongbin Jeong.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.